Hello and welcome to the conference call at the Dkt and TDC Holding, Tdcnet and Nuuday held on occasion of the Q1 results released earlier today. My name is Henrik Hjortøj Nielsen and I'm Head of Treasury and Investor Relations. Thank you for joining the conference. As we showed you, first we kindly ask all of you to mute your microphones during the presentation. If you want to ask a question during the Q&A, please write your name and organization in the chat and we'll return to you. An alternative is to send an email to investorrelations@tdc.dk and we will do the Q&A after the presentation. I have with me Tdcnet CEO Andreas Fischer and Nuuday CEO John James. I will present the highlights for the quarter of Dkt and TDC Holdings Group. Subsequently, I'll give the word over to Andreas, who will take you through the performance of Tdcnet, and John will do the same for Nuuday. Then we'll open up for the Q&A session. So let's go to page 3, where I will present the highlights from TDC Holding Group in Q1. In Q1, we saw a slight increase in revenue as reflected by 1.0% growth. This development was primarily driven by a historically high growth in revenue from mobility services, where we saw positive net adds of 11,000 in Q1. Revenue growth was dampened by the development in particularly landline voice as well as broadband. Gross profit declined by 1.3% in Q1, which was related to landline voice and third-party fiber networks, which Nuuday have enjoyed strong sales from across all brands. The decrease in gross profit was partially offset by the lower operating expenses. Operating expenses were lowered by the continued focus on cost savings across the organization, where we have managed to reduce, for example, personal expenses within support functions and property expenses. EBITDA decreased by 1.8% in Q1 as a consequence of lower gross profit, only partially being offset by lower operating expenses. Finally, capital expenditure decreased by 7.6% in Q1 2021. The decrease partially reflects lower expenditure on coax following the end of DOCSIS 3.1 upgrade in Tdcnet. In spite of this decrease, TDC Holding Group continued to have a high investment level to support Tdcnet's fiber rollout strategy and Nuuday's transformation journey. The funding of TDC was changed in Q1 as Tdcnet obtained committed long-term bank facilities to redeem the term loans, an EMTN bond and RCFs at TDC Holding. A RCF was also obtained at Nuuday. Let's go to page 4 that presents the key figures of TDC Holding Group financials. On this slide, we have summarized key figures from TDC Holding Group for Q1 as well as for 2021. While the previous slide highlighted the key insights for Q1, I want to emphasize that the performance also indicates that we are well on track to deliver on a stable to slight decline in EBITDA as compared to 2021 financial year. This mirrors the guided financial performance in the annual report, which we published last week. On page 5, we decompose TDC Holdings Group performance into its two business units, Nuuday and Tdcnet. Tdcnet CEO Andreas Fischer and Nuuday CEO John James will add more details to Nuuday and Tdcnet's development on the subsequent slides of the presentation today. Tdcnet and Nuuday's performance make up the lion's share of TDC Holding Group's numbers. The TDC Holding Group performance also reflects a correction for eliminations and the performance of remaining activities in headquarters, i.e. leasing contracts on properties and cars. On page 6, we show Dkt Holdings Financials. We've presented the figures for Dkt, which generally mirror the numbers for TDC Holding Group. As compared to TDC Holding Group, the only noteworthy difference from Dkt Holdings in the profit and loss statement lies in the net interest payments and depreciation and amortizations. Here the Dkt figures also include payments on the Dkt Finance high-yield notes, as well as depreciation and amortization of asset recognized in connection with the purchase price allocation of TDC. On page 7, we make a deep dive into the development OPEX and CAPEX. In Q1, we reported that operating expenses decreased by 0.6%. The improved operating expenses were fueled by continuous focus on cost savings across the organization. And as a result, the whole organization has managed to reduce, for example, personnel expenses with support functions and property expenses. In Q1, capital expenditure was DKK 935 million in total, a decrease of 7.6% compared with the same period last year. We're committed to Tdcnet's fiber rollout strategy and Nuuday's ambitious transformation journey to radically simplify the business model and transform IT. The big decrease in eliminations in Q1 reflect an internal sale of IT assets from Dkt Holdings to Tdcnet and Nuuday. Finally, on page 8, we shift our focus to the group's capital structure. As of March 2022, the leverage of Dkt Holding Group was 5.5x and Tdc Holding Group was 3.7x. Leverage has increased as a consequence of the negative cash flow in Q1, driven by debt servicing payment related to 2021. The TDC and Dkt capital structure has changed in several respects since Q4 2021. Tdc Holdings senior secured debt has been prepaid and its EMTN bond 22 redeemed at maturity. Furthermore, a new senior secured facility at Tdcnet has been raised, and both Nuuday and Tdcnet have obtained their own RCFs. All of this has been carried out to support the separation journey of TDC and provide Nuuday and Tdcnet with their own financial backing. With these words on Tdc Holdings Group's financial performance, I will now give the word over to Andreas, CEO of Tdcnet.
Let's flip to page 10, and thank you, Henrik. Hello everyone on the call and the stream. I'm Andreas Pfisterer and I'm the CEO of Tdcnet. I will for the next few minutes summarize the main highlights for Tdcnet in Q1 before going into a bit more details on the financials of the quarter. I'll take over a short walkthrough of the financial results. Tdcnet's revenue totaled at 1.678 million DKK in Q1 2022, which is a stabilization compared to the same quarter last year. The development stems from an increase growth in high-speed broadband technologies and mobility services, which offsets the lower revenue from legacy products. EBITDA totaled at 1.162 million DKK in Q1 2022, which is an improvement of 0.7% compared to the same quarter last year. The growth in EBITDA is due to a reduction in our operating expenses of 3.1% year-on-year. In Q1, capital expenditure totaled at 780 million DKK as we continued the high level of strategic investments into high-speed broadband with 20,000 additional homes passed with fiber. This is an increase in our fiber rollout by 18% compared to the same period in 2021. The level of new homes passed is expected to increase in Q2, again compared to last year. Looking into some commercial highlights in Q1, Tdcnet maintained the claim of having the best mobile network in Denmark. The Danish Technology Institute measured the ability of the 4 Danish mobile networks to deliver a good network experience, and the study showed that Tdcnet has the best mobile network in Denmark and remains the only network in the country with a nationwide and fully operational 5G network. Q1 also marked an important step in the journey for Tdcnet as a standalone company, as we secured a new infrastructure financing platform of 25 billion used to finance existing TDC holding debt. And lastly, Q1 marked Tdcnet's connection to the first of 4 solar parks to the grid as part of our company's ambition to reduce CO2 emissions from own operations, which refers to scope 1 and 2, by 50% in 2023. And during 2022, more solar parks will be activated. The investment is a central part of our climate plan and our climate ambition to turn net zero latest by 2030 on scope 1 to 3. Flipping over to page 11, where we check in on the financials of Tdcnet. Going into more detail with our financial results for the quarter saw a revenue stabilization driven by continued growth with our high-speed broadband offerings and mobility services. However, this was offset by a decrease in revenues from our legacy products, TV, landline voice, and copper DSL broadband. This is in line with our full-year guidance of stable revenue. On gross profit, we experienced the same developments as we did on revenue. Operating expenses were down by 3.1% year-over-year in the quarter, despite the increase in power prices. The improvement in operating expenses for Q1 compared to last quarter in same quarter in last year is driven mainly by cost optimization relating to the support function in Tdcnet, which more than outweighed the increase in power cost. In addition, the reduction in operating expenses were partly due to positive one-off effects relating to the separation of Tdcnet, as the markup on previous group activities are now saved. Summarizing the stable revenue and gross profit with the improvement in operating expenses, EBITDA for Q1 totals at 1.162 million, an increase of 0.7% year-on-year. Thus, Q1 made a positive EBITDA development despite effect from power prices. Going forward, our exposure to power prices will become smaller and smaller as our 4 solar parks will get into production with a fixed power price through the power purchase agreement which we signed for EBAC. Capital expenditure increased by 11%, as mentioned earlier, due to continued high fiber investments with a higher production in Q1 2022. The higher production was also reached with almost the same fiber CapEx spend as the fiber rollout costs were lowered as planned. And that concludes the Q1 messages from Tdcnet. Now over to John James, CEO at Nuuday.
Thank you, Andreas. I am John James, Chief Exec of Nuuday, and I will take you through a similar structure to Andreas's words on Tdcnet, to give you firstly some highlights of the quarter from Nuuday, and then a brief look at the core financial outcomes from Nuuday. I think the important message for Nuuday in Q1 is that we have continued to deliver on the journey that we outlined in Q3 and Q4, namely to stabilise our customer performance in our critical strategic products of mobile and high-speed broadband, where we are critically dependent on those products to sustain the future-proof nature of the Nuuday business. The consumer mobile base grew by 2,000 RGUs, and we narrowed the loss in fixed broadband customers from previous quarters to just 1,000 RGUs in the quarter. And this is a significant improvement in our performance, particularly in consumer broadband, and clearly we intend to return that business to growth in the quarters to come. At B2B, we continue to grow our overall RGU base, particularly led by successes in contract wins in mobile voice. The growth in our broadband, in our critically important consumer broadband business, was fueled both by improvements in our marketing and sales activities, but in particular by this significant expansion in our footprint, which took place during 2021 and continues into the first half of 2022, onto third-party utility providers, allowing us to offer a virtually nationwide fibre footprint to our customers when they move or when they migrate from legacy technologies, particularly DSL. And for both UC, Hyper and TDC, we have significantly expanded our footprint for our customers, and look to complete that nationwide expansion with launches on Fibia and others imminently. We have also expanded our market-leading entertainment proposition by adding Disney Plus to our content offering. That's both across the bland cell offering within UC, which allows our UC TV customers to combine both pay television and streaming services at market-leading prices and with great convenience, but also within Telmore Play, which has a unique offering of mobile together with a play combination of the best of the available streaming services. And finally, we continue to leverage the extremely high quality of the Tdcnet 5G network. This has driven our success in both consumer and business mobile, and we in particular took advantage of that by adding 5G to all our One Plus business mobile subscriptions, together with further enhancements in our business offering, which continues to establish our position as the leading mobile offering in both consumer and business markets. Moving on to the next slide, touching briefly on the financials. The stabilisation of our business, both in mobile and in broadband, has driven a year-on-year improvement in service revenue of 2%. In particular, our strength in mobile across both business and consumer has allowed us to grow service revenue and to compensate for declines in legacy services, notably fixed line telco, and also in TV, where we continue to lose customers in Q1, in part thanks to the price rise, the annual price rise in our TV service, which took place on the 1st of January. Our gross profit decreased by 4% year on year, and that is a combination of the costs of DSL migrations to fibre, but also investment in customer experience, which have increased our costs associated with the specific migrations of those customers. At the same time, we've decreased our operating expenses by continued attention to our cost base, but also improvements in our customer experience, which have reduced the volume of customer calls coming into our call centre. Our operating expenses fell in Q1 by 2%. As a consequence of that, our EBITDA decreased as guided by 6% in Q1 year on year. We can expect to continue to see modest declines in EBITDA, driven by the gross profit pressure from that migration from DSL in particular towards fibre, as well as the investments we're making to enhance our customer experience and the investments we're making in our significant IT transformation, which in some part do affect our EBITDA performance. Finally, we had a small increase in CapEx year on year. We are beginning the significant investments in our business transformation, specifically in the replacement of our complex IT stack. That will intensify through the course of 22, and we will report on both the OpEx and CapEx consequences of that transformation program transparently, so you'll be able to see the performance of the underlying business as well as the total performance of the business, including all transformation costs in the future quarters. So with that, that concludes the summary of Nuuday's commercial